Hello guys, welcome back to AWM FX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully you guys out there are doing extremely great, earning a lot of money from the market. Now today I would like to share with you the importance of SSR in our supply and demand trades. So what is a SSR? Now it sounds like support and resistance, but there is something more sinister. No, actually there is something more important in this support and resistance. Now let's give you some education. Now when we look into support and resistance, usually we will look at where are the price rejecting. Okay, now if only one price rejecting, I will only tell it is a normal support and resistance. Now I'm going to tell you what is the danger of it. Very simple. Now, if you look at it at this moment, I scroll all the way down, all right? Maybe I scroll away and then I put it on the most right-hand side. I just place any single lines randomly. Now, if I look to the left, you can actually see that all my line is an SSR. Sorry, all my line is support and resistance. There is definitely some rejection all over the place on this line. Okay, so that's why it is not that reliable. Okay, this is the first clue. Now the second clue is that you don't need to look at things that is far away. Example, if I am trading at this current moment, so I'll be looking into this part SSR. That's it, end of story. And when it is combined with a good supply and demand zone, that is my trade. It is that simple. You don't need to complicate yourself and look all the way to maybe 2020, 2021. No need. You only look at the at the current time. All right, current time SSR. First clue. Now, second clue. When we have a lot of zone, the zone is all over the place. We have supply zone, demand zone all over the place. Is it possible for us to trade everywhere? Answer is no. Some zone will definitely going to fail you. I can guarantee you that. So what happened is that you need to look at a zone that is being backed by a SSR. Okay, so a SSR is a support and resistance zones that has a lot of rejection. So this rejection can be from the top. It can also be from from the bottom. Right? It can be multiple, both way, single way, whatever. I don't care. As long as there is a lot of rejection, I will categorize as a SSR. All right, so I'm going to give you some example, if you allow me. Now, first thing, if you look at the price reject at this zone, why is it so? We must understand why is it so that the price rejected here. There is, of course, a reason for it. Now, if we identify our supply zone can be anywhere. It can be right here, all right? It can be right here, all right? And of course, it can also be right here. But how come the price only rejected at this area? Very simple. When I drop a horizontal line behind it, you can actually notice that price rejected not once, not twice, but 3 times. Okay? And as the price break, it gives you a huge zone, okay, of a supply zone. Price came back into the zone and then continuously drop some more. So that is why it is very important. Now, the next question people may ask, what kind of time frame should I use? There are multiple time frames. There's weekly, daily, H4, H1, 30 minutes, 15 minutes, and also M5. Now, simple explanation. Every time frame has its own supply and demand. Every time frame has its own significant support and resistance SSR. But for me, the bigger time frame is, the more efficient it is. However, similar with the zone is getting bigger and you are unable to trade it. Don't tell me you saw this kind of zone, you're going to trade it. You do know how big is the zone? 280 pips. How big should your account be? Now, what can you do in this case? H4 is a representative of an anchor time frame for me. I repeat again. H4 is a representative of anchor time frame for me. Why is it so? Because it suits how I trade. It suits my time of trading, and it also suits the way of I trade. Some of you guys will feel that, oh, too big, too huge. I want something that comes faster. No problem. You can take H1 as your anchor time frame. You can take 30 minutes as your anchor time frame. So for me, what happened is that I'm going to use H4 as my anchor time frame. And when the price comes or came back to the time frame, to this zone, I will be going lower time frame, maybe H1, H4, 15 minutes or 5 minutes to get my smaller time frames zone as my trade for me to go. Okay, so I'm going to show you one more example. Now, the next example will be when the price came down. I don't know what is going to happen. Very simple. Now, first thing, we need to identify our zone. So we have two very beautiful zone right here. This is the first demand zone. This is the second demand zone right here. Okay, so I do not know which zone it will react to. So first thing, first of all, get a horizontal line, place a horizontal line behind it. Okay, now in this horizontal line, you can see that this zone, demand zone, there's only one rejection. Do you still remember I told you guys before? You must have multiple rejection. If only one rejection, there is going to be big doubts about it. Am I correct? So the second one, it doesn't look nice. Yes, there's a lot of rejection, going up a lot, going down a lot, protruding a lot. It doesn't look nice. Okay, no problem for that. So if you're unsure, what you can do is that you can go to lower time frame to make sure. All right, to make sure. Now, as I go into lower time frame, what did I notice in this whole area? All right, what do I notice in this whole area? Very simple. I noticed that is a QML for a buy. Do you guys see that? Price went down, go back up, came back down, and then push it all the way up. Does it break the structure? Yes, it does broke the structure. All right, it does broke the structure right here. Okay, so where is my zone to trade? My zone to trade is simple. It is going to be right here. Okay, it's going to be right here. This is my zone to trade. This is my zone. So does the price reject at this zone? Maybe you can say that I prepared earlier. Okay, I don't care. So this is how we look at the zone, and this is how we identify the zone. All right. So if we go further down, you can see that the price rejects a lot along this way. All right, rejects along. We have multiple rejection. Okay, we have multiple rejection. Okay, so this is a very good zone. All right. So the next thing I would like to address is that how about this zone? All right, it seems like there's some rejection and then this zone, but the price keep ignoring it. All right, means that the price just ignore and go. Now, don't worry about it. All right, don't worry about it. A lot of times, people don't understand the concept of supply and demand. When a supply and demand zone that has a high probability being ignored or being pushed away, okay, what happened is that the price actually will come back to react with it. Now, what you can notice here is that when this candlestick came down, not totally, okay, close below this zone, all right, the price actually came back up to react to the zone and then give you a continuous trade. So it means that even though you have a loss trade for the first time, actually you have the second opportunity. All right, this is what we call as swap zone. All right, the zone has been swapped. It's supposed to be a demand zone. Now it become a supply zone, and it is going to give you significant movement as well. All right, if you don't believe, we take a measurement. The movement is worth 300 over pips. I'm not sure. Are you satisfied with 300 over pips? Okay, so hopefully this short video explained a little bit about how we're going to use significant support and resistance in our trading of supply and demand. Now, if you enjoy the video, you found that the video actually helps you understand more, please do click on the like button and subscribe to the channel. So I'll be dissecting more questions, of your question. I'm going to answer more of your question, dissecting more of the, way of trading just for you guys. All right, so that is all for today. See you guys next time. Bye.